Hey everyone, it's Daniel here from InfraVest. Hope you're all doing well. Let's talk about James Bullard, one of the Federal Reserve members. He's a non-voting member this year, although known to be kind of on the hawkish side. So how important are his comments? Well, it's still good to notice and hear what each Fed members are saying regardless of their votes. May not have so much weight because he's known to be a very on the hawkish side and is non-voter. But it's very important to hear what they say, because if other Fed members start to mimic the same things that Bullard is saying, then very quickly you will see the markets reprice this whole narrative of getting rate cuts very soon. Right? The markets are pricing in that we're going to see some sort of rate cuts come in by the end of the year. And for that to happen, there would probably have to be something that really, really breaks in the economy and the markets. So I say that is possible if you get something that really, truly breaks, and that does cause the Fed to come out and do the rate cuts. But if not, and we're still okay, then I don't see how we're going to get rate cuts this year. We may get a pause, but rate cuts, I think, are too early to be talking about, especially if nothing breaks. But let's talk about this article here. I'll post the article in the description for you to read up on it. It comes from Bloomberg here. It says, Bullard says oil surge might make Fed's job more difficult. Federal Reserve Bank of St. Louis President James Bullard said OPEC's decision to cut output was an unexpected, and an increase in oil prices could make the Fed's job of lowering inflation more challenging. Remember, right? They're out there hiking rates because they want to tame inflation. They want to break the back of inflation. And how do they do that? They do that by suppressing demand, trying to kill demand by hiking these rates and creating tightening conditions within the economy, which tightens the banks, which then spills over to consumers and businesses and so on. Right? So he then says that was a surprise, he said Monday during an interview on Bloomberg television. Whether it will have a lasting impact, I think it's an open question, right? So we did see that OPEC cut X million barrels per day. I think it's about a million. So you got that pushing oil prices on Sunday night when the futures market opened from around, I think oil was around $75 a barrel, popped all the way to $80, $81 a barrel, causing the prices to move up, which hence would be inflationary, right? You would see that in the inflation report, in CPI, and if oil continues to rally above 80, 85, hits 90, right? We also heard JP Morgan's now pricing in or expecting oil to hit around the $90 or I think $95 mark. If we start getting to $100 a barrel or higher, that is definitely inflationary. Definitely is going to make the Fed's job even more difficult, which may hint that we could see higher rates to try to truly break something, cause a complete collapse to bring inflation down, because we don't want more inflation, or especially the Fed doesn't want more inflation, right? So it says oil prices fluctuate around. It's hard to track exactly. Some might feed into inflation, make our job a little bit more difficult. So that's what Bullard said. And then scrolling down, Bullard was expecting rates to peak around 5.6% this year, right? But policymakers have said in their projections last meeting that they still see another quarter point rate hike that's coming in May to reach to that 5% target. So Bullard did say that, he did mention a couple of things that, that the markets that are pricing rate cuts and these probabilities, the markets are Wall Street's completely off and should be listening to the Fed, and was saying that also that the banking fears or the banking issues, said 80 to 85% has already eased, no problems there. So he's coming out sounding like, okay, the markets are wrong for pricing these rate cuts, that the banking issues are solved, the contagion issues are solved. The problem we have, let's refocus again, is on inflation. And I said this before in the previous videos too, that you're going to see the banking fears and this narrative and these news are going to subside, and then the focus is going to be back on inflation again. It's going to be very interesting also when we get the CPI report this month and more data this month. It's going to be really interesting if the market starts to go back to repricing from rate cuts to now hiking again aggressively, right? We've seen the markets go from expecting rate cuts to no rate cuts to hiking more to 5.5, close to 6%. Certain bond traders expecting that we're going to see 6% in interest rates, to now back again, 100 basis point rate cuts. No, okay, 80. No, now it's 50 basis point rate hikes. The markets are completely all over the place, predicting and changing every second depending on data. That's why it's really important to be data dependent, to watch what the markets are doing, what they're pricing, what the data is coming out, what are the contagion fears that is happening, what's breaking, what's not, because those are the things that are going to cause and create a direction, whether it's the stock market or the bond market, especially if those data points and the macro news ends up being more firm and being confirmed by the markets, then you will see a clear direction. Right now, everything's in limbo. Right now, the equity markets are all over the place, even though it's been rallying since the start of the year. It can definitely change. But however, we have a lot more data to see, the inflation report, and Bullard coming out sounding again hawkish, saying that, hey, this oil issue is going to make our life difficult, and that, hey, don't worry about the banking thing. And hey, I still see, and Bullard said, I still see rates need for rates to hit above the 5% level to tame inflation. And he's coming back with the narrative, inflation, inflation, and inflation. So what's going to be important going forward is to watch now the other Fed members. Do they mimic the same thing like Bullard? And then when we get to the meeting, after a couple of data points this month, when we get to the meeting, it'll be interesting to see what the projections look like, or actually what Powell, we're not going to get the projections in May, so sorry, correction there, but what Powell's going to say in the next FOMC meeting. How do they view this banking crisis after the May meeting? And if they hike, which is probably a likelihood scenario, if they hike do a 25 basis point rate hike in May, are they going to pause now, or are they going to continue, or just say data dependent, and then the next meeting, if really inflation starts to come down or something breaks, then you could easily see that, hey, maybe a pause is what's coming next, right? So very important to track this, to see if these comments from Bullard if you're going to see similar comments from other Fed members, because that's going to change the narrative, that's going to change what's being priced in, and definitely change the way how the markets trade and where the direction goes for bonds and stocks and gold and currency and even crypto and Bitcoin as well. So let me know what you guys think. Leave a comment below, subscribe, hit the like button and the bell icon to be notified on the next video, and I'll see you guys around. Cheers. Bye.